Should I file bankruptcy or should I short sell my house in the state of Georgia? If you're facing financial difficulties and struggling to keep up with your mortgage payments, you're likely weighing your options. And two common paths are filing bankruptcy or pursuing a short sale. The right choice depends on your financial situation, long-term goals, and whether or not you want to keep your house.
Welcome to the Bankruptcy Podcast, a podcast about untangling the complex world of bankruptcy in Georgia. Each week, we deliver the best insights and practical advice on how to navigate the legal waters of bankruptcy with expert guidance and real-life stories. Now here's your host, Jeff Kelly.
In today's video, I want to talk to you about the top 8 things that somebody should consider when they're asking the question, should I file bankruptcy or should I short sell my house in the state of Georgia? If you're facing financial difficulties and struggling to keep up with your mortgage payments, you're likely weighing your options. And two common paths are filing bankruptcy or pursuing a short sale. The right choice depends on your financial situation, long-term goals, and whether or not you want to keep your house. Let's explore those options in detail. All right, let's start with Chapter 13. If keeping your house is a priority, Chapter 13 is the way to go. This type of bankruptcy allows you to reorganize your debt and to create a manageable repayment plan for homeowners. The key benefit is that past due mortgage payments can be rolled into a single Chapter 13 payment plan, giving you the option to catch up on your house. However, Chapter 13 only works if you have the means to stay current on future mortgage payments. In other words, if you've got a mortgage payment that is so sky high and you don't earn enough to make those future mortgage payments, Chapter 13 is not going to work well for you. On the other hand, there's also Chapter 7 that provides a way for you to discharge all of your debts, such as credit cards, medical bills. And while it doesn't directly help with a mortgage, if it's a situation where you're wanting to let the house go anyway, Chapter 7 could end up being a good alternative for you. Now, let's go through things to consider as you're making a strategic exit from this house if you're considering a short sale. A short sale involves selling your home for less than the amount owed on the mortgage with the lender's approval. And that's key here. The lender has to approve it. And this option may be able to help you if, for whatever reason, you're just dead set against doing a Chapter 13 or a Chapter 7. But there's something super important that you have to take into consideration, okay? And let's go through all these things. Now, number one, are you going to miss out on being able to live a lot of months rent-free on this house that you're getting rid of? Let me explain. Let's say you're going to file a Chapter 7 and it's going to take 6 months before your mortgage company ever gets around to foreclosing on the home. Well, if you just move out or if you do a short sale, you're going to miss out on this, potentially 6 months, sometimes even longer, where the mortgage company drags their feet and you're getting to live rent-free in this house. Now, I know a lot of people feel bad about it and they feel like they need to get out sooner than later. Actually, the mortgage company is going to want you to stay in the house because you're protecting it. You're not letting people come in and raid it. They want the house maintained until the foreclosure process is completed. So, you definitely want to, number two, you want to avoid moving out prematurely. A lot of people, when they get that bug to go, they give in and they move out and now the house is empty. And vacant homes are a lot harder to sell in a short sale as well. So don't abandon the property. Okay, another consideration, credit implications. While both bankruptcy and short sales impact your credit score, foreclosures tend to have a more severe and lasting effect. A short sale may look more favorable on your credit, compared to a regular foreclosure, while bankruptcy offers a clear timeline for rebuilding your credit, typically within 2 years. Okay, additional debts. If your financial struggles extend beyond your house, such as credit card debt, medical bills, and car loans, bankruptcy will provide a more comprehensive solution than a short sale. Now, you got to take the tax implications of a short sale into consideration before you make that move. So When a lender agrees to accept less than the full amount owed on your mortgage, the difference, known as the deficiency, is typically forgiven. However, the IRS may treat this forgiven debt as taxable income, which could result in significant tax liability for you. So, some key points to keep in mind. Number 5, the Mortgage Forgiveness Debt Relief Act. For homeowners in Georgia and across the U.S., the Mortgage Forgiveness Act, which was originally enacted back in 2007, provided some relief by allowing taxpayers to exclude forgiven mortgage debt on the principal residence from taxable income. However, this law has expired and been extended several times, so it's very crucial that you check with your CPA and your accountant to see if this is still a viable option.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button now. This podcast is made possible by listeners like you. Thank you for your support. If you're intrigued by the world of bankruptcy and want a comprehensive guide to help you get out of debt, head on over to kellycanhelp.com/welcome and subscribe to our email list to have a guide to bankruptcy in Georgia, helping people get out of debt delivered right to your inbox. Now back to the show.
There's also number 6, there's an insolvency exception. The Mortgage Forgiveness Debt Relief Act doesn't apply. You might still be able to avoid tax implications of forgiven debt if you are insolvent. Now, this exception applies if your total debts exceed the value of your assets at the time the debt is forgiven. Proving insolvency requires detailed documentation of your financial situation. So again, you got to work very closely with your CPA to ensure that you meet the requirements. You're also going to have to take Georgia state taxes into consideration as well, number 7. And so again, go over that with your CPA before you make the move. If forgiven debt is considered taxable income, your lender will issue what's called a 1099-C, cancellation of debt. You've got to report this on your federal and your state returns. Failing to account for forgiven debt properly can lead to penalties and audits. And again, I want to stress to you, if you file Chapter 13 or Chapter 7, that is not a taxable event. You will not owe taxes as a result of filing Chapter 13 or Chapter 7, but you might owe them if you do a short sale. So conclusion, explore all your options. Deciding whether to file for bankruptcy or pursue a short sale is a major decision with long-term implications. Consult with a CPA if you really want to go that short sale route. If you want to give us a call, we're happy to go through your options. Every case has different twists and turns, and so why not get some good legal advice before you make that decision? Thank you so much for tuning in.
Thanks for joining us this week on the Bankruptcy Podcast. Make sure to visit our website, kellybankruptcy.com, where you can subscribe to the show in iTunes, Spotify, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. If you liked this show, you might want to check out our guide to bankruptcy in Georgia, helping people get out of debt. Available at kellycanhelp.com/welcome. Be sure to tune in next week for our next episode.